Welcome back, folks, to Investor Diaries. Today we have a special guest with us, Samir. He works with Walmart and he's been in this e commerce space for a very long period of time. And he's going to talk to us about investing in the space of e commerce. So, Samir, welcome. And if you can give us an overview about how does this e commerce investing space look like, then we can proceed.
Thank you, Project. Thank you for inviting me to your show. The way to think about it is, and I'm sure you're focusing on the investors who are just getting into investments and trying to establish their portfolio or look for opportunities that are going to make them money. I think the first thing that you got to look at is when you're looking at a company, what is their customer value proposition? What are they actually offering? Logically, does it make sense to you or not? And then what is their business value proposition? What are they going after? What are the key metrics that they're going after? Once you have clarity to that, then you are able to make sense. Okay, if I'm going to invest in this company, this is how they're going to be able to benefit the customers, and as a result, it's going to benefit the business. Now think about talking about Shopify. It's a very simple value proposition. You're bringing offline stores online, and that's a very impressive value proposition, and it expands the reach of those stores to beyond their local radius, almost globally, if you want to take it that route. So that's very simple customer value proposition. On the flip side, business value proposition is that we are going to operate as a software as a service, and then provide benefits to the customer by charging them a monthly rent on building their websites for them, or taking them online. And now, without going into too much detail, at a high level, that's what it is. Now that you have understood that, you understand that the addressable market size is huge, and there's not a lot of competition in that space. And if the competition is there, it's very complicated to understand. So if you were to just look at that, you're like, okay, a strong value proposition for customers and business, that seems like a strong business. So this is the company that I want to invest in. So at a high level, this is how you start assessing these companies and benefit from the smart people who are building these companies.
Yeah, so Samir, I think it would be helpful for you to just dive a little bit deeper into trying to understand that you can't go to a Shopify website and buy any stuff. So if you can actually expand on that, it will be helpful because it gets a little confusing sometimes because people say Shopify is competition to Amazon.
Yes. Shopify, the way to think about Shopify is that Shopify is building a software that connects customers to businesses, and it's acting as a middleman. And it does not have any branding of Shopify on the website that is built. So so let's say a project is running a bookstore that is located in downtown Toronto, and a project does not have any way to reach out to customers online. A project is like, man, a pandemic has hit and I don't know how to reach to my customers. Samir comes in. Samir is like, man, I can help you with that. There's a company called Shopify. You can literally go sign up on that website, spend about 2 hours, and you can build your own website, and you can go online instantly. You don't have to pay thousands of dollars to developers in Canada, or outsource your work to India to build that website. You can do it on your own. It's a DIY for yourself, and then all you do is you pay them $35 a month, and that's about it. And you can go online. So a project goes on their website, signs up. A project's bookstore is a project's bookstore. Let's just call it that, and then that's his branding. He goes there, uploads a few pictures, then uploads his inventory, and he's off the ground, and he's ready to go online and sell it to his customer. So now what a project can do is, customers who are walking in, he can tell them, well, I have a website too. I do not have this book available here, but if you go and order online, I can get it shipped from my supplier directly to your place. And you're like, okay, yeah, that's amazing. So that's one area of business where a project is expanding to, which is called extended aisle. The second part is, now he's going beyond downtown Toronto. So I'm sitting in Ottawa or in Scarborough, and it's an hour drive for me to go to a project store, but I know the kind of books that I want to read. are available at a project's bookstore. So I go to a project's bookstore, and I'm like, I need that book, Investor Diaries. I go and order it online, and now it can be shipped directly to my place. So our project business grows on two fronts. For his existing customer base, he does not disappoint his customers, and then for new customer base that is beyond what his existing radius is.
So, yeah, I think this was a very helpful explanation, Samir. Now, flipping gears to Shopify's performance and stock performance, do you think that people who did not buy Shopify stocks 2 years back or a year back when it was trading at 300, 400, $500, they have missed the bus? Like, what are your general impressions about Shopify as a stock?
I do not think so. So yes, you may not have made a lot of money in the last 6 months. Shopify was trading as $300. Now it's trading yesterday at $920. So the 300 times return, you have not made that. But that doesn't mean that you cannot make a high return on an investment like Shopify. And the reason for that is Shopify has just started tapping into their addressable market. The addressable market is huge. Their core focus has remained primarily in North America, and now they're moving to other parts of the world and expanding in Europe and stuff. So what that tells us is that within North America, there's a huge market that they have not tapped into, and there's still a lot of potential. Then you go to outside of North America, that is an other huge market that goes untapped. So just think about where we are headed now. We are in the midst of pandemic, and consumer behavior is changing. And what does that tell us? There's going to be less foot traffic in your store, naturally, because people are getting used to sitting at home and ordering online. And then people are cautious because of the COVID restrictions, and trying to stay safe and keep their family safe. So those are the two key trends that are emerging from this pandemic. And what that tells us is a lot of people are just going to go online, and these small businesses are going to find ways to go online themselves. And when they do that, there's not a lot of options that you have available. You have companies like BigCommerce, Magneto, and all of those companies, and Wix, and then Squarespace, and all those companies. But the ecosystem that Shopify has, none of the other companies at this point have that. And what I mean by that ecosystem is that Shopify has spent a lot of time in building. So Shopify realized very early on that they cannot do everything on their own. So they were like, okay, if we cannot do everything on their own, what can we do to enhance our product offering? So what they did was they built up their marketplace, similar to what we have for iPhone or Android. You go into Android Play Store or Shopify, on Apple App Store, and you download an app, and your phone's capability of doing something expands exponentially. It's the same way Shopify has done there. Like, we have a standard stack of offering that we can offer, and these are the only things that we can achieve in a year because we have limited resources. But we open it for the marketplace where other developers can develop the apps and upload it on a website, and then the customers can benefit from it.
Yeah.
That kind of offering nobody has, and that's the real value that Shopify offers to its customers.
Yeah, these are very, very insightful comments that you've made. So if my time horizon is large, if I'm thinking of 3, 4, 5, or even 10 years down the line, do you think it's a no-brainer to enter Shopify at any levels?
100%. So you gotta look at your investments, not in the short term, especially with companies like these. You gotta look at them long term. And what I mean by that is, think about when you make a real estate investment. Do you think about benefiting from that investment in a month, in 2 months? No, you don't. You're like, okay, even if you go for pre-construction housing, you are thinking about that we are going to get a return from that investment in 3 years. You got to start thinking about your stock investments like that too. Yes, there is a portion where you can benefit in the short term, but with these long-term companies, growth companies, the biggest bang for the buck comes when you are able to hold them for long term. Think about Amazon. Amazon, for 8 years ago, was sitting at $300. Right now, it's at $3,000. If you had invested in that company, what would your return be? Your $300 would have been worth $3,000. You're talking about 1,000% return. That's how you got to think about it. And we still believe that there's a lot more potential in Amazon because they've only tapped a very small portion of online market. So that's how you
Okay.
got to think about it.
Okay, so this is a good segue, I think, from Shopify towards the other big chain that everyone talks about, Amazon. I think we've lost definition of what business Amazon is in. The results that they announced a couple of days back, you saw the cloud grow at 29%. It's undisputed leader in cloud. Talk to us about Amazon. It was expensive 3 years back. It's expensive today. Like, what are your thoughts on Amazon as a stock?
And again, so you just got to go back to the basics. Whenever you're thinking about these things, you got to go back to the basics and understand what is it that they're trying to do. Their customer value proposition is extremely strong, and they're using that customer value proposition to build their business value proposition and the key metrics around it. It's a flywheel that they go after. Lowering the cost of goods for the customers increases their volume, gives them the leverage to overall reduce the cost of the goods that they buy, and then benefit it to the customer. And that is evident across every business that they have started and expanded, whether it is retail. I know this flywheel concept started from retail. Think about cloud. It was applied to cloud. Think about Amazon Media Group. It was applied there. Think about Amazon Prime. The same concept was applied on Amazon Prime, and they are now trying to take on Netflix. Whether they are successful or not, irrespective, they have created a huge market out of it. So again, my point is, a company like Amazon is such an innovative company. You cannot go wrong. These are a bunch of really smart people who are trying to solve world's most difficult problems. So right now it's at over $3,000, the Amazon stock. Would it go higher? I think it would go higher, just because they are going to continue to take a grab of this expanding online market, and the transition you have seen in e-commerce penetration. It has increased significantly, and it is not going to change that much. And Amazon is the leader, and they're going to continue to take a grab at it.
Do they even have any competition, Samir? Like now the scale has gone so high.
They do have competition, and there are some strong competition that is arising. You got to think about, when you talk about cloud, you have IBM, you have Microsoft, you have a bunch of other cloud companies like Oracle. All of these companies are there, and they're expanding their offerings. So they are getting a lot of competition there. When you talk about retail, you have a lot of these innovative companies coming up, that are trying to build a niche market for themselves. So in specific categories, they're getting a lot of competition. When we talk about furniture, you have companies like Wayfair that are leading the mark. If you look at how Amazon was doing in terms of furniture in the past 5 years versus how they're doing right now, I think Wayfair is leading the market share. And when you think about some of the other categories, or when you think about the broad categories, you have Walmart emerging as a competition as well. When you talk about grocery, Walmart is leading that. So yes, Amazon has a lot of competition in specific niche. Amazon is playing in every possible category where they can play. So they have to have a very specific strategy for each of their businesses, and within those businesses, each of their categories that they're serving customers. So that's what I see, and you have to be very careful about who those emerging companies are, and how can you leverage from them by building a portfolio that consists of not just Amazon, but complements some of the other companies in your portfolio as well.
Yeah, so we'll now move towards some of the other players in the field of e-commerce. So we would probably be looking at Etsy, Walmart, Target. and there are a lot of others. What would you think about investing in this space? Like during the pandemic, even Target and Walmart, their numbers have skyrocketed. Maybe not so much their stock price. So, what do you think about these stocks?
So you just got to understand the situation that we are in. Players who have benefited the most are the ones who have a strong offline and online presence, or just their pure play online players. So think about Wayfair. Wayfair was actually not doing as well pre-pandemic versus how well they have done post-pandemic. Similarly, when you think about companies like Target, they have a very strong online presence and they have a very good offline experience as well. So all these companies, and when you talk about Etsy, all these companies, even Pinterest, even Facebook, even Snapchat. Think about Snapchat. It was reporting losses quarter after quarter and was not growing at the pace that they had to grow. But post pandemic, everything is moving towards tech enabled companies that are serving its customers. So when you think about these things, you got to look at the macro picture and not just the company level detail. You have to combine it with what's happening around you and how do these companies play a role in shaping that future for the customers.
Okay, so this was also helpful. So, parting thoughts, if I am an investor, I do not have any holdings in the e-commerce space as such. We'll give you a hypothetical number to work with, Samir, and that is say $10,000.
So there are two ways. Generally, when a new investor is starting off, I tell them to start off with ETF. And within ETF, there are multiple options in ETF which comprise of all these um, diversified portfolio of tech companies. You can easily go and type tech ETFs, and you'd find multiples of them. You just have to look at what has been the return and what are the holdings that these ETFs have, and then invest in those. So that is one option. The second option is to build your own portfolio. If you have done some research based on the framework that I told you, very high level, look at their customer value proposition, business value proposition, what is their price to earning ratio like versus their peers, and is that the industry standard? What you may find is with some companies, their PE ratio is astronomical. But if it's still comparable to other similar companies, then that means that, although it's astronomical, that's the industry average. So you should look at some of those high level things, and based on that, you should decide that these companies are going to do good in the long term. What is their debt level like? That's one of the key areas that you should always pay attention to. You don't want to invest in a company that goes bankrupt, although they have such a huge growth happening. So just look at the basic fundamentals, and if you feel like you don't understand these, you don't know that, just get a general sense of where the investors are investing. Not just a mom and pop shop investor, big investing companies are investing in. They have done all their due diligence, and you cannot go wrong when somebody is spending billions of dollars in these companies. You cannot go wrong with their analysis. Read some analyst reports. If those analysts are saying to invest in these companies, go for those companies. I'll give you a few examples. The companies that are going to last for the foreseeable future. Examples of them are, Google is not going anywhere. Amazon for the foreseeable future is not going anywhere. Tesla is shaping the future of electric cars. You also know that Facebook is shaping the world of social media, and they're just going beyond Facebook and Instagram. They have now WhatsApp. They have a lot of other innovative things that are happening. So if you're thinking about social media, think about Facebook. Think about Shopify is another one. I don't know if I mentioned, but when you think about those companies, think long term. If you think long term, you're not going to lose. If what you're going to see is, as a beginner, do not look at your portfolio every single day. You invest in these companies, delete the app, forget that you have invested, go back and check these companies after a year, and I can guarantee you, you'll be making money most likely if you have a diversified portfolio.
And this was really, really helpful, Samir, to give our viewers perspectives of e-commerce, the players within the e-commerce industry, and eventually how to start a portfolio. So I'm glad you also touched on some of the other companies outside the realm of e-commerce, folks. So this is it. If you have any thoughts, comments, or suggestions, please feel free to let us know. As always, please subscribe to our channel. It really helps us. Thank you so much.